will start in 5 minutes. Can everyone hear me? All good, hopefully.
Hello. Hello.
Okay. Henry, can you hear me?
Yeah.
Alright, I can hear you too. I am just getting everything situated. Start in 5 minutes. If you have to go to the bathroom, go to the bathroom, grab a snack. Should be a good one today, guys. Got a lot of stuff going on this upcoming week. We will start in 5 minutes. If the music's too loud in the background, let me know.
What's up?
Good morning, good morning, good morning.
Happy yes. Louise, George. Good to see you.
Nick, what are you doing, you little jitterbug? I see you in here. Sorry, my thing wasn't on. I can't go. Good morning, good morning. Today's drink of choice is apple juice. No coffee. I didn't have time to make it. I'm running a little behind. So I had a thing of 100% fresh apple juice. That's what we're riding with today. Highly recommend. Good for the brain, good for the brain. Looks like bourbon, to be honest. No bourbon for me, no bourbon for me. At least give it an hour before the bourbon, Nick. Probably. Probably. Alright, I guess we can get started. So, news. Not a whole lot of news this past week. We had news on Monday, we had news on Thursday. Most of the movement of the week came later in the week. Kind of expected that. We'll go into when we look at the charts this week. Not a whole lot going on Monday. We have 10-year bond auction at 1 p.m. on Monday. Tuesday will be a show, CPI month on month, CPI year on year, tagged with core CPIs. Wednesday, you have PPIs month on month, no yearly PPIs there. And then in the PM session, you've got FOMC projections, statements, and funds rates. Wednesday will be fill the stuff, Also, you have the press conference at 2:30. Um, watch for that 3:30 power hour on days like this. I like really to watch that for the most part. Um, sometimes there's stuff in and around the PPIs prior to 9:30. For the most part, though, I really kind of sit on my hands until 3:30 there. Thursday, you got core retail sales month on month. You got a manufacturing index. You got retail sales month on month, unemployment claims, and another manufacturing index that's a little lighter. And then this industrial production month on month. And then Friday, you've got member speaking and consumer sentiment. So jam-packed week this week. Probably a lot of volatility. At least speaking for Tuesday, obviously be careful. Do not get in the market during CPI. If you are, God so help your forsaken soul, should be doing that. It's kind of a no-brainer. If you're still sitting here deciding whether or not you should trade that, you should be more so thinking whether or not you should be considering trading, because that's just not a thing. Other than that, seek and destroy profile, something to look out for. When we get into the charts, we'll kind of talk a little bit more. But this week, hopefully, should show us a lot. I don't want to get too much into it until we get into the charts, but this week could show us potentially maybe a high in ES. We could go a little bit higher, but there'll be a lot of movement this week. You'll probably have a pretty decent weekly candle. Don't expect a small weekly candle, expect somewhat of a big range. So start thinking about weekly profiles, start thinking about where we open up, new week opening gap, start thinking about where we trade to prior CPI after Tuesday, start thinking about where we have already traded, what the weekly candle looks like, where that wick could be. I do not think that the week will open up and just go I don't think the week will open up and just go one direction. So let's start thinking about where that first direction of the week is and how it could potentially be a wick on the weekly. And then, Thursday and Friday, once you already have CPI, PPI, and FOMC kind of behind us, start to think about potentially what Thursday and Friday could unfold with regards to potential actual direction for the week. Other than that, anyone got any questions with regards to news? Should be a jam-packed week. Alrighty, let's go into charts. DXY, so I've been trying not to touch my charts, at least for the dollar. From the last time I talked to you guys, whatever I put there is usually the last thing that I leave on there, and I just let it sit there for y'all so you can see kind of what I was kind of thinking the week prior. So here we are. I obviously last week was talking about how I kind of had shied away and steered off from any bearish bias. I'd kind of done that 2 weeks ago, actually, when we were here. I know we were looking at these three highs right here, and last week we were kind of trading up here. I noted this SIBI, I noted this SIBI, and then I noted this volume balance, and obviously the relative equal highs up here. But I was wanting more of so of a retracement. We were talking about how the dollar was kind of moving in a mixed market, and as the dollar was going higher, ES was also in tandem with it, which creates a mixed market. I mentioned how that's not going to last forever, and you want to start to see that in the coming weeks, start to switch off and have them kind of crack and go against each other. ES continued higher this week, dollar started to go lower, so you can start to see slowly that cracking correlation. Now, I still believe that the reason why I think we haven't had a high in ES yet, one, nothing has been shown. There's no structure that has been broken. I'm not going to try to call top on ES. But with regards to dollar, I can start looking to see where that low creates, because now that I can see a crack in the tandem nature between the two, I can start to see when dollar potentially forms a low. That could guide me to help me potentially see when ES forms that high now. So we are starting to turn around from where we were going higher. Now I think we are more so just potentially retracing into some form of discount. I liked this breaker. I like this being an order block right here. Whether or not we want to go below this low is 50-50 to me. I want to see more so the top half of this entire breaker be sensitive. Um, we've got a SIBI right here, and I want to see that potentially be inverted also. We do have two BISIs right here, but to me that's a little bit of a stretch. There's a tiny volume imbalance in here. So I'm thinking that we potentially go lower into some form of discount, being either this volume imbalance, this order block, or this breaker. They all higher into, uh, even though we did throw higher into a little bit above 104, 250. Candle bodies, for the most part, respected the city, right? Candle bodies tell the narrative, wicks do the damage. So you have to understand that even though we are going higher, if there's no candle bodies that are willing to close throughout the week, as you're watching these candles, you can see that really nothing is giving its way yet, right? It's going up there and it's going above it, but the wicks are really just, you know, taking liquidity on lower time frames, filling whatever it needs. With regards to daily, everything closed inside of it still, came back down. So I'm still kind of looking for that low. It'll be a matter of if and when we, on this way down, on lower time frames, given a 1 hour or 4 hour, when you come in here and you start to make highs, and then you hit something, whatever that is, right? At that point, at this point, is when I'm really trying to sit there and see now whatever this low is, wherever that low is in here, look to see where ES is, look to see if ES is kind of correlating that vice versa. And if we are creating a low in dollar, are we able to now then create a high in ES? That's something that I'm looking out for. I'm looking to see if we can potentially engineer any, internal buy-side liquidity in here. Is there any relative equal highs? Whatever the case is. Obviously, we've got a lot of wicks. If you want to look into it a little bit closely, or a little bit more closely, you can sit here and you can start to realize maybe it might not be a double top. Maybe it's not relative equal highs, but you do have clear trendline liquidity, right? That's the same thing, right? You got a lot of retailers that'll sit here and they'll use a trend line right here, and it'll bounce and it'll bounce and it'll bounce, and the more it bounces off this trend line, the more it builds liquidity with regards to buy side, because sellers are thinking that this trend line is going to hold. Why they do, that's beyond me. But with that being said, I'm curious to see if when we get back above this down close candle, even if we do go lower, I'd like to see when we get back above this candle, if this starts to be really sensitive and act as an order block and invert the SIBI. I know we're going to talk about inversion later. But once we do come down and make some form of low, and we do get back above this SIBI and this SIBI, I'd really want to see that be inverted and see the behavior on the dollar kind of invert and go higher. Not going to really sit here and think too hard about the relative equal highs. The only thing on my plate really right now is actually this high, and then potentially this volume imbalance, and then the buy side liquidity. Aside from that, I'm not really going to start to think too much about that until we can start to actually show some form of low form, and we can get back above, 104, 250, 104. And overall, even if there's, a couple down close candles with small up close candles, this could be one big order block all the way down. If he throws one more down close candle, if I'm measuring this, if we throw one more of those down, puts us right there, right? It could be maybe not Monday, Tuesday, whatever the case is. If I can get one more down close candle in here, I would view the whole thing as a order block. I would take 50% of that, watch the threshold, and see when we get above it, can we be sensitive? So that's just some stuff to look out for. Any specific questions? I know chat's going here. Implied fair value got May 15th. May 15th. This candle? Correct? Maybe? Well, May 20th. I was going to say, if there is going to be one.
You talking about inversion, Nick, or implied?
I think he's talking about implied. I would say potentially
The 25th.
this right here. 25 it looks like.
Yeah, inversion.
Recording in progress.
Yeah,
Henry, can you annotate?
inversion fair value gap on the 24th, right there.
Oh, okay. So this right here?
Yeah.
Okay. Yeah, so even like with regards to that, same thing, like even though we could potentially invert it. So first start of the week actually, kind of zooming into what potentially could happen. So you've got a SIBI right here, or a BISI right here. That could be currently inverted, right? That could invert for us to potentially go lower down into here. Let me take this off so it doesn't get a little too foggy. So price could, if it wants, it could open up the week. We could throw a wick up into here, right? Invert this for now. This 50% of this wick would be, I would also look at the 50% of this wick. Could stretch up into here if it really wanted to, and then go lower. Yeah, so tomorrow if we can get up into here, if we can close back above it, right? If we get a daily closure back above it, we might have made it low. That's going to be a little bit harder to see, and there would have just been a case of potentially turtle souping this low to go higher. But yeah, if we can close above it and use it as support after going back below it, that's something that would be in the case of going higher also. Good eye. Swing left from it. I don't want broken. Okay. I mean, it makes sense too, potentially, as to why you wouldn't want this. Even though there are discount arrays, this is a swing point right here. You got down closure. And if I were to take the 50% of this entirety of this down closed candle, right, it's just now, that's where we finished, right in that order block, right in the threshold of it. So, I mean, worst case scenario too, in Nick's case, we might open up the week and we could throw a wick down in here if we really wanted to. There is no wick. That's the only thing that makes me a little suspicious, which means there's some form of open-end liquidity down there. But we could very well open up, go lower, throw a wick, and then immediately go higher. So that's something to think about. And if you're also looking at it from a different range perspective, you could sit here and you could say, from this swing low to this swing high, we are in a discount, right? We've already delivered below a discount. We've already taken liquidity. And if I take that in half too, and I get the second half of that discount, we're now in a discounted discount too, right? We're in the second half. So we're in the most discounted portion of the entire range. So we could potentially push higher if we do get back above this equilibrium. So that's something to watch for sure. Good eye, Nick. We're also at equal lows of last year's range. So if I go to last year, just getting a yeah, right here. This is what Jess is talking about. Right, so overall, you've got the equal lows that were a huge target in 2022 and early this year, right? We took that liquidity, we pulled all the way up, we created buy side liquidity, came all the way back down, took liquidity one more time, and now we're kind of pulling back up. And now that was what we were talking about, how we have this scenario where we've got clear buy side, clear sell side, but sell side is for the near term taken, right? We did get that sneaky purge on liquidity where price does take that low, even though it is relative, that low has been taken. When over here, it's actually not, right? You've got that one breaker candle in here, that break in liquidity on this low. Low comes in at 170.88. Previous low comes in at 108.20, right? It's a little bit lower. When over here, you got this high on this imbalance being 105.896, and this being 105.883, a little bit lower. So this is open in liquidity. This is somewhat closed. People are going to see the most recent swing low broken and think that that is a market structure shift and trap for bearish take spot. Yeah, I mean, I agree totally, right? And I think something like this can it can be foreseen a lot easier too when you start looking at ES too, where ES is and what ES is doing. So 100% here, everything here is still valid. Does not necessarily have to go into here for the longer term of things. And also, if you do see how we did, once we pulled out of, once we got through these three highs, you can see price does in fact come in and, already visit this CIBI inverted right here and was very sensitive to it. And it is a swing low, right? You've got a low with a lower high and a lower high on either side of it. Down closed candle with displacement that takes out a high. This could be still viewed as an order block, right? Sitting at the equal lows. So that's everything there is still valid, right? I think it's just a matter of CPI. It's a matter of really post CPI, right? Because I'd like to see where Monday closes one. Monday closure and where we kind of are at CPI probably will give you a really good idea of what's going to happen. But I only took one trade last week, and it wasn't until Friday, and it was. We'll go into it later when we go into the trade reviews. But obviously, one thing that is in my favor with regards to my trading is I'm very patient with things, right? I'm okay waiting, even though Tuesday, Wednesday, I don't trade Mondays, but Tuesday, Wednesday, Thursday, even if I don't see anything, I won't trade. And that helps me a lot. Even though, yes, did I miss some moves here and there? Yes. But in June and July, really, I up my risk a little bit. So instead of risking, half of a percent, quarter of a percent, or maybe 1%, I actually start to risk like a 1.5% to almost 2%. And I really kind of cut down on the amount of trades that I take. And that's just me as a person. That's me as a preference. When I get into June and July, I trust myself a lot more, just because of my past meetings with June and July. The past when I've traded June and July, they've been very good to me. But what I learned is that what I could do as a trader to get better was, instead of trying to trade 3 times a week, trade once a week and up the risk, and then just have everything mentally down the line for me work, right? If I lose, that's fine. The risk gets cut in half, whatever the case is. And then really, if I lose my first trade of the week, I only utilize the rest of the week to potentially try to get it back, unless I lose 2 more times throughout the week, then I'll be done. And that's 1 loss at full risk, 1 loss at half risk, 1 loss at quarter risk. If I go 0 for 3, that's fine. But if I hit the first trade, I stop trading because of that, increased risk. That's just me as a trader. That's me allowing and accepting a higher risk tolerance. But note that doesn't happen for me the entire year. I'm not doing that the entire year, right? Earlier in the year, I was using, no more than really 1% risk, sometimes 0.5%, sometimes 0.25%. And, there's areas in the year like June and July where I will kind of cut back even more on the amount of times I'll trade throughout the week. Like really kind of dial into one specific scenario that I want to see unfold that I saw somewhat on Sunday. Yes, things adapt and things change, but really only play to that tune of that. If it doesn't give it to me Tuesday, see what happened on Wednesday. If it doesn't give it to me Wednesday, see what happened on Thursday. If it doesn't give it to me Thursday, see what happened on Friday. If it doesn't give it to me at all, I don't trade, right? And so that's just me as a trader, right? There's things that you might just stagnantly only like to risk 0.5% and just continue to trade certain amounts of trades. It's perfectly fine. Nowhere in any book or video says that you can't do that. But I have found for me it works. So I try to only have one. I'm only aiming for one winning week or one winning day, one winning trade a week in June and July. And then August comes, I take 3 weeks off. I don't even look at a chart. I come back. I have the 4th week of August kind of be a warm up. If I'm going to trade, back to quarter, 0.5%. And then the 2nd week of September into the last week of October, I do the same exact thing as June and July. So June and July and then September and October are my months of the year where I am increasing my risk rather than just continuing to try to gain, 3 or 4 trades a week with the same risk. I want to have 1 trade a week and I want to have an increased risk. And if I do lose that trade, I switch from trying to have a profitable week. I'm not too worried about that, right? I'm just now building back the loss. That's perfectly fine. Next week, I do the same exact thing over again. Some people will agree with that. Some people won't. That's perfectly fine. That's just me as a trader. So, like for example, this week, I only had 1 trade on Friday. I had longs, and I risked 2%. And I think I got like a little over 7%, right? That's a lot harder to achieve. I had to hold the trade a lot longer if I'm risking 0.5%, right? It's still in the same vicinity of my, weekly goal, daily goal with regards to handles too, right? I didn't do anything different. I didn't, my trade was not bigger than most of my trades. It wasn't an insane big trade. It would have had to have been if I was using 0.5%, but because I'm using 2%, I don't need as much out of the market. So it's still the same thing. It's just increased risk. Does anyone have any questions on the DXY? I think most of us are somewhat on the same page. We are just kind of sitting here and looking for this low. Also, with regards to anything bearish on dollar, if you've already looked to see, yes, there has been behavior with regards to body closure in dollar with regards to the SIBI, right? There's the SIBI and there's this order block. But for the most part, this is sloppy, right? It's sloppy. It's not sensitive to it. It threw so many wicks above it, which means price already kind of traded through it. Even though the body's respected it, that's just for near-term direction. But for the most part, we've already gave away a lot to this SIBI, right? We haven't really been respected. We didn't respect this. We didn't respect this. This could have been viewed as an order block, and we didn't really respect this too much, right? When we came up into it, we kind of came down a little bit, came right through it, right? So I'm not, there's nothing here that's screaming to me. There's nothing here that's screaming that we could continue to go bearish. I know that there is some arrays. One thing that potentially might help though, there is this breaker right here. And we've been respecting that. Right, you can see very clear. We've got a low, a high, low with displacement. That's the only thing that's kind of holding it. You can see how sensitive it was to the top half of this breaker. But I think that that's really the last line of defense for any sells. Other than that, it's I think it's a route from there. I think once we find this low in dollar, we go higher, and we'll find a low in ES. And speaking of ES, Mr. Henry, are you ready to rock and roll? Does anyone have any questions before I pass it over to Henny? All good. Hopefully you guys are on the same page. I want to see basically just into this moral of the story, short and sweet. I want to see a low form in dollar this week. What day it does, I'm not sure. Where it does, I'm not sure. But there's a relative area in which I want to see it. And the best way to also notice that is, take like that BISI, like Nick said, take this BISI right here, throw it out. When you can get above it, see if it acts as support. Same thing with this SIBI. If you can get back above it, see if it acts as support. And then last thing, like I said, on like a 1 hour, right? look for that break of structure, look to see a clear, discount array, and then see if price can go higher. And once, and let's say maybe this doesn't necessarily equate to a low for you. That's fine. Let it show you, right? Let it come all the way up here. That's perfectly fine. If you're talking about ranges and where we're going, especially on ES, don't be the guy that tries to catch the low or the high. Like, that's just it's not cool, dude. Put it in that way. Like, you have plenty of time, plenty of ranges, plenty of handles to catch, and you're better off being confident in a low or a high and maybe increasing your risk a little more rather than trying to call a high and still being shaky on it. Let me do this right here. You're good.
Good. Yeah, so looking at ES this week, we've reached up into those premium arrays that we were talking about last week. And from here, just where we are in the range, I'm kind of neutral at this point. We've reached the targets that we've been looking for. And so now it's time to kind of just be patient and wait to see what happens next. I haven't seen anything yet that would indicate to me that this high right here is the top. Just like person was talking about as well. So we could potentially see a push higher up into some more premium rates. We do have buy side up here. And we do have this city from back in April of 2022. But before this starts to turn lower, if it is going to, I would want to see some of these discount arrays be disrespected. So close. Well, I'll now have a BC right here. In this lower, in this high. And we also have this volume balance here. So if we get a close below some of those, then we can potentially start looking for conversion and that move back lower. But until then, I would just expect to see either consolidation or a continuation of the bullish order flow. If we go down into, so yeah, we traded right up here into the high of this city right here. And if you notice the close of the candle, the city high is 34 or 43.0475, and the close of this candle is 43.0475. So exactly, so it's like all respecting the city. If we go on to the blue chart, you can see that we traded just above it. Use this whiskey as well. It's traded in that top quarter and then up to the high of that city and into its inefficiency right here. Now, buy side has been taken right here on the blue chart, so you can potentially see a turn and shift over here. But I would want to see some of those higher time frame discount arrays that close below before we really start to say that this is coming lower. And of course, we look for confidence with the DXY as well. What to watch for right now on ES, just on the daily chart. I just like to see kind of what happens at this point. Yeah, I'm pretty neutral, so I'm just looking for continued consolidation, or maybe I push a little bit higher to go to the city. If this is going to keep continuing high, we can reach up into the buy side. But in order for me to turn any short-term bearish on this, I would at least want to see a close under this to see. You might be able to use volume balance as well. But we still have a lot of discount arrays here. And the thing I like to look at too are the other indices, which are still continuing to fire and look pretty bullish. And NASDAQ respecting top quarter of this BISI, so which kind of bullish confidence, reaching up into buy side up here. We do have weekly chart. The city here, this breaker as well. But we could potentially see a little bit of a new higher. This is respecting that volume imbalance. And then there's that this here as well. We're going to trade back in today for a new higher. And then I'll look at the Y line as well. So it's pretty clean on the Dow. Sell side goes right here. And this is like your 22 model essentially. You're looking to all this buy side up here. Sell side was purged here. And the shift in market structure over this high, and then the replacement down below equilibrium. And, you see right here. So long from there again, and then we're trading up into the outside. And now we're continuing to respect these discount rates. So on the Dow, I'd just like to see continuation up into here. Let's see. We do have contract expiration on this and next week, next Friday. So I think ESU is actually trading. I'm not certain, but maybe trading the volume at this point. So you can go ahead and look at trading, switching over to ESU. But you could trade ESN for this next week as well. I've started to transition my charts over into ESU because you have different movie open dots and other videos if you utilize those. That's pretty much it for what I'm looking at now on. Let me just any question here. See, we're still even doing contract condition. Yeah, Pablo. So you're gonna have different. I'll just leave it with you. A lot of it, I mean, you're going to see the same discount rates for the most part, but your numbers are going to be different. At 34, 43 or 475 here, and then when you see it at 43, 48, 25. So, and you are going to have different movie opening deck as well. So you're going to have to redraw those if you use those. Otherwise, the analysis is pretty much the same. Can't see anything really on the daily chart here. But on the weekly, same idea, right? We have a basic volume balance and then potentially buy some like we are food we continue to reach higher. And then that's the city as well. Questions there? We can go to the next.
If you want for them, you can go over the weekly profile. I forget what it was, but
Yeah.
here. So while I'm here, while I'm here, I'll just go over my trade for the week, and then we'll go over weekly profile, and then I'll give it over back to Henny to start talking about conversion. But this is my only trade this week. I said it was on Friday. It was on Thursday. So these were obviously the executions. It's like a little under 30 handles, 25 handles. Nothing too crazy, but overall solid trade. I'll go over in TradingView what I was looking at, but at least you guys can see here the executions. You can see that no partials were taken. Person, why didn't you take partials? Well, I was targeting internal liquidity for the most part, using like a 5-15 minute range, and I kind of just, the reason why was more so just because my stop management. I know you can't really see it, but I'll talk about it in here. So on Thursday, obviously we had a clear draw on liquidity, and I talk about that all the time, where it's like if you can have some form of clear draw on liquidity, you know, if you can just start to get on that on some form of run there. So we had these relative equal highs. Yes, this one's a little bit higher, but it was still very clean to me. And with regards to where we were on the week, obviously you can see, to me, I see consolidation, manipulation, you know, and I was viewing all this as a Judas swing. So when we came into Thursday, had the idea that we could potentially hold this low. Now, I was looking at this as a breaker, and I wanted to see it potentially hold as a breaker. But the reason why I didn't necessarily just execute immediately, right? You have a low, you have a low, low, high, take out the low, we take out the high with displacement. I thought we were going to come reclaim right into here, and we do. We just overstretched it a little bit. And there was no more displacement in here aside from this. So it was a little, I wanted to see how price reacted. We also put a low right above it. So it was, in my head, I was like, okay, you know, Thursday was it was the second and only other day throughout the week besides Monday that we had red folder news. So I kind of was, you know, looking to see how the late AM session played. But more so, I was wanting this entire range to kind of fill, right? I was wanting this high to be taken, and I think we ended up actually taking it. But for the most part, because I have an increased risk, because I'm really only trying to trade one, I'm a little bit more foolish to try to play external liquidity. So even though there was no clear, you know, imbalance in here, so I would really try to play to like a SIBI in here. There was no SIBI, so what I did was I took the mean threshold of this up closer right here, right? This acting as some form of order block, right, in this breaker. And really my take profit in a sense was kind of this breaker and this threshold, right? Somewhere in between here is where I wanted. Even though the idea was to go higher, I'm more so just trying to play internal liquidity for the most part. It's a lot more consistent. So if I go in on a 1 minute, this is obviously that breaker that was on a 5 minute. 930 equities open, we go lower, we make a low, we go higher into the SIBI, we make another low, lower low, right? Setting me up for potentially a breaker model, unicorn model, whatever you want to call it. But we go lower, we make some form of low, we go higher into a premium array, right? We go lower again, coming off of here. So we're here, we go lower, right? We throw 2 more wicks lower, taking out this low. Notice how we are now in, if you look at time, 950 to 1010, right? There's a macro right there. So we're inside of a macro. I have my eyes on obviously this 5 minute breaker block. I notice how even though the candles don't quite perfectly stay inside of it, it's still very somewhat sensitive to it, right? The candle bodies are still there. So we throw wicks lower and then we go higher. I'm waiting to see if we can get above this high, and if we do get above this high, is there any displacement? Well, we created a SIBI, or we created a BISI right here. Right, so we have a BISI right here. Price comes in, starts to go outside of it, right? You get that market structure shift, but you're still inside the SIBI. We go lower. Now I'm watching to see if this candle can be, if we can maintain for the most part, candle body closure on the top half of it, right? So I'm taking this breaker, I'm cutting it in half, and I'm using kind of like the consequent encroachment, mean threshold of it, to see how the candle body nature responds. I do not get in on this candle. You can see how we kind of did down into it. Institutional order flow. We close right back above it. Everything stays closed above the top half of the breaker. And then we go higher, and we're now kind of just consolidating in this SIBI. This is when I kind of went long. So I kind of actually went long on this up close candle. So as we're kind of going higher in here, I'm going long, and my stop is at this low, right? I'm now in the mindset of thinking that this is going to be an institutional order flow entry drill. We're now back above. I can already see 2 candles right here. We already stretched outside the SIBI a little bit, came back down. We had down closure. I'm now anticipating this to be a potential order block. And as we're kind of lifting off of the top half of this breaker right here, I'm watching that, and as I see us kind of start to trade back above the consequent encroachment of the SIBI, I'm pressing the buy button with my stop loss right here, right? And I'm targeting in here. Now, I exited up on this up closure because this is right when we were kind of breaking through that breaker, and so I'm more so setting, as we were getting up here, I had set my triggers kind of in and around this area, but I remember I lowered them a little bit. I'm not trying to overstay my welcome, and I knew that we were already kind of pushing up into a breaker, and I had a feeling we could potentially retrace, so that's kind of where and why I got out. With regards to following the trade though, you know, we throw this all the way up, right? We get a really big reaction following getting outside of that city again off this breaker. And we leave this really long wick. I like that a lot just because, you know, retail, when they see these really long wicks, they see that as selling pressure, right? And over time, as you gain more experience as a trader, you can start to, you know, see the difference between like this wick and this wick, right? It's just notice how they're both down closure wicks, right? But in different directions. This one goes all the way up and then still closes down, right? Retail is going to see that as, you know, selling pressure. And then notice how this one goes all the way down and back up and still closes down closure. So there's difference here. Study stuff like that. But pulled back in, obviously, following this from like a trade management perspective, you could easily see we made a SIBI right here, right? Extend that out in time. We create a swing point, a low, a lower high on each side in here. We go higher. Because I had the idea that I wasn't necessarily going to take partials on this trade and I kind of wanted to hold it full, I had to be on top of trade management, which means I can't be moving things too quick, but at the same time, I'm not going to just not trade or not move anything to break even before going there. So I have to have an idea in which I'm going to go break even. Because my entry, we'll call it right here. So I'll just put an arrow here because we did not execute on TradingView. We'll just call it, my entry was like right here. We go higher. So once I see this behavior in the SIBI or BISI, and we go make a higher high in here, I'm now going to move my stop to break even. I now have a one hold discount array plus a swing low in front of me. Even though I know that we could reclaim it, I didn't want to see it get reclaimed below this low because you can see we already delivered all the way through it, past it a little bit, but overall for the most part, look at the bodies and the consequent encroachment, right? Respect, all good there. We go higher, we have another SIBI, right? So if you're just marking out SIBI or BISI, right, marking that out. I also can mark this out. You can also mark this out as an order block. You also have a volume imbalance right there. So I'm watching all of these things. Price goes into it. Higher. You can see the relative equal lows right here. 1, 2, 3. There's nothing. I'm not gonna move it too quick. I'm not gonna move it up. I want to see price willingly kind of fully create a high, potentially come back in it, and then trade away from the high. Once we get above the high, then I'll start to move my stop at whatever low is formed down here. So we come through it right here, right? We take out these relative equal lows. We reclaim this BISI one more time. Very sensitive, comes all the way back up, goes higher, creates a high. And at this point in time now, I'm watching all of these highs, right? All of these highs, and I'm looking to see how price kind of plays with them. Because usually when price is running for buy-side liquidity, it's going to kind of create relative equal highs. So I'm sitting here and I'm watching kind of these highs. I'm seeing how we're kind of pulling into them and then retracing. Price comes down one more time and is still more sensitive to it than it was this time, and then we go higher. Once we get above this high, right, you can see the relative equal highs on these two wicks. Once we get above this high, my stop now goes to this low. Right, this is the last low. We have down closure. I have an order block that's kind of protecting me. So now I'm moving my stop just from where it was in here to right here. and we go higher. Really nothing in here. You can see this is something that's good to note too as a trader. When you're trying to expect, maybe expect retracements and then not expect retracements, why was I potentially expecting a retracement here? Well, you had a lot of inefficiency. Like if you're looking at it, there was, I think, 3 BISIs in this whole price leg right here. Right? You got an inefficiency here, you got an inefficiency here, you got an inefficiency here, and obviously right here. But when you look at this price swing on a 1 minute, notice how everything has immediate rebalance. Immediate rebalance. Immediate rebalance. Right? Immediate rebalance. So there's no inefficiencies here. So my stops at below here, I'm willing to bump it up potentially below the order block, right? Because if it's going to go below this low on this, if this is the order block, if it's going to go below this low, odds are it's probably going to take this. And at that point, I'm just getting every little piece that I can with regards to stop management. But I'm not expecting a retracement in this range, right? I'm wanting price to just continue higher. Same thing here, right? I'm looking to see if we have immediate rebalance. Rebalance right here. Right? You've got a little tiny BISI right here, but not much. Price closes it up right here. And for the most part, you can see this was a high. We come over, we have down closure, set a down closure right here. You can use this as an order block and just start to kind of use that as some form of order block. Price just chops away. Now it gets a little choppy. Comes down, touches it. Remember, we've got highs over here, so it's kind of peeling off those highs. Still stop is still down here though. Even though I've got a bunch of immediate rebalancing, I'm not too suspect to move my stop loss, because even though there's immediate rebalancing, really the only valid place for me to place my stop loss now is the mean threshold of this down close candle. If I start to just put it below these down close candles, I could be susceptible to something like this, right? Where price just goes internal soups at any of these internal lows. So that's where you have to be patient with your stop management too. Sometimes it's not constantly moving it, but it's just knowing where to move it and when to move it at the right time. So my stop still stayed in and around this area for most of this until I saw us kind of clearly run like a turtle soup, which would be this, like where you get a run right here. And this is going into the lunch hour, which is usually now where I start to get very quick to make sure I get as much as I can, because I don't like being in the lunch hour. But I still was in this trade. So from there, what had my mindset still confident that we could go higher? Well, relative equal highs right here, right? So even though we're going lower down in here, I'm knowing that we could potentially take some of these lows in here, but we still have a clear drop. So I didn't necessarily shift. Now, if this would have gone higher, if this wick in here would have gone higher in here, I would have been a little bit more susceptible, right? That looks a lot different than this. So I have to sit here and I have to be confident in the fact that we're still going to take this. And I know that everything down here is already rebalanced. So really just trying to maybe snag at any of these lows, that's fine. Once this occurs and we take this buy side, right, I'm moving my stop loss here at that low. We have a BISI. Notice the respect of the consequent encroachment. Notice how price is just now crouching, creating more buy side liquidity. So now I'm just waiting. You start to now attack it, and then it just spools higher, right? Once it gets there. Once it starts to fully purge this last pool of liquidity internally, it just spools, right? And then at this point, I took out somewhere in here. So that was kind of my trade for the week. You know, that's why I also, when I have increased risk and I'm only trying to trade once or twice a week, I'm not, even though the idea is the external liquidity, I'm only probably always going to play internal liquidity. There's no reason for me to try to play external liquidity. Because if you think about it, how did Thursday end out? Well, we left the relative equal highs, right? We created relative equal highs. So if I was aiming for this external liquidity, yes, obviously stop management would have had me still be profitable, but it's a better feeling when you're, for this example, you're buying. It's a lot easier to get out on a trigger or up closure rather than getting stopped at break even, or not stopped at break even, but just stopped out in general, getting stopped out on down closure. It just, when you leave that trade, you want to try to leave that trade with the most sincerity of emotions that you did the correct thing. And even though you're doing the correct thing with getting stopped out and profit and all that stuff, I would, like, when I'm buying, I like to know that I walked away selling on up closure. When I'm selling, I like to know that I walked away buying on down closure. It gives a good, clear conscience when you walk away from the trade. Because if you don't do that, or you try not to do that, and you just let it, and you just really, you're like, oh, well, at this point, my stop is so much in profit, I don't really care. Well, that's true. I agree. But also, you want to think about your conscience following the trade, because it's like, my take profit was right here, and I got stopped out down here. Let's say, this was my take profit, and, I got stopped out right here, or something like that. I have this little tiny voice in my head that says, all right, just try to get back in one more time to just try to get the complete move, right? You're just kind of making yourself a little bit more susceptible to those types of thoughts rather than trying to just get a clean slate of consciousness getting out of the trade. Louis said, hey Carson, on the market structure shift, are you looking for the body of the candle to pass the high or the wick? It's not always the candle bodies. The candle bodies can add weight to the confidence behind it, but it does not have to be the candle bodies, or it does not have to be just a wick. Because if you think about it, a wick on one time frame is candle bodies on a lower time frame. Even though it might be a second time frame, you might see a wick on a 1 minute that takes out a high, but on a second time frame, there's candle bodies in there. So hopefully that makes sense. So yeah, with regards to this trade in ES, this is exactly why when I'm increasing risk, I'm very susceptible to trade external liquidity, and I will always just try to play I'm really only looking for the the first to last, let's see how I put this, the last line of defense on the premium raise. So if I'm looking to fill this entire range and I'm only playing it internal, well, if there's relative equal highs in here, right? If there's just relative equal highs in here, that's great, I'll play it. But if not, I'm looking for, the last line of defense with regards to premium range. So any Sibia in here, if there's an order block, I use threshold, whatever the case is, like I'm just looking for the last premium array to really play inside this range, right? That allows me to know that price is drawing to an area that it wants to go to, but it doesn't necessarily have to go outside of a range, because it can do things like this on Thursday, where you're just creating liquidity for the very next day. Because if you can see on Friday, we obviously run and take it. Friday also offers some clean price action. But for the most part, if you're wondering why I'm not necessarily trying to target that, it's just because it's stuff like this, right? The difference between, call it 6-7 handles, is not enough for me to sit here and try to, take away anything from my trade. And so I was perfectly fine with 25 handles, call it that. Like I don't need another, I don't need 35 handles. I'm perfectly fine with 25 handles. There's not that much of a weight significance on it. So yeah, that was my trade for this week. If I'm going back out here as to why I might have looked at this on higher time frames, obviously, if you guys have been on the calls, we've been bullish. You have not seen me talk about sells or being in sells or anything like that. One thing that I was watching going into the week though was the consequent encroachment of this wick. Right, we've got this really long 1 hour wick. Right, why did I think that low could hold on Thursday? Even though we had that kind of consolidation, manipulation, and then expecting some form of distribution, even though it lagged a little, why was I viewing this as kind of a Judas swing, and why was I expecting it to potentially hold? Well, if I take the consequent encroachment of this wick, right, that's when we had dipped down into it. So if I go back down on the 1 minute, and I have that higher time frame level, right, you can see from there, right, we dip into it and we break structure, right? We break structure, we pull all the way up, we had a very significant kind of redelivery higher from it. So going into, when price was going down, when price is coming down here, the entirety of this entire kind of, I don't even know what you call it, retracement lower, I still have the idea that price is going to hold this low, right? 15-minute candle body closure tells me that it's still respecting it. Obviously, I could use this as an order block. And if I take the mean threshold of it, right? If I were to take the mean threshold of that and go back down into a 1 minute, how does price play when we get into that threshold, right? Only one 1 minute candle touched that threshold, and look how sensitive it was to it, right? So everything on the 1 minute that I just talked about, there's a handful of things, something on the 1 hour, something on the 15-minute that I'm taking, and I'm also kind of utilizing that to help me watch it. It's not just a game of watching the 1 minute. I'm looking at these other things, and I'm just watching to see how the behavior is. Did I know that we were going to go lower into it? No. But when I'm looking at just this segment of price action, just this is setting everything up, right? This is not where you want to be buying. There's nothing here that screams buy. There's no model here. This is setting up the model. This is why you have to be patient. You have to have this, and there's this precursor to a bunch of models, and it's not like people think that you're just going to go and hop right in and just find a model right there. Models have to form. So yes, you could go in and find a whole bunch of different models, but you have to know what you're looking for and allow it to set up. So like if I'm trading a breaker model, what does that require? A low. What does that require? What else does it require? A high. What else does it require? The low to be taken out. What else does it require? The high to be taken out. There's nothing here until this is taken out. Until all of this has to form, this has to set up, right? And so it's training your eye to expect, like, okay, what arrays are right here? What liquidity is up here? And how can I start to anticipate it, right? Don't anticipate this to be the low and just start buying off that, right? That's gonna just cause for a stop out that it doesn't need, right? I encourage you to be a little bit more patient and actually know what does the model entail? What do I need? What do I need to see form? Right? One, I need some form of higher time frame arrays, whether it's a 15-minute, a 5-minute, a 1 hour, 4 hour daily. And if you're even talking about even higher time frames. That was just a 1 hour. If you go out to a daily, what else could have potentially helped me? Two things on the daily. One, you have a BISI. Sorry about that. One, you have a BISI. And two, on Thursday, what did we do? We took out 2 previous days' lows. Right? You don't have to expect it to potentially draw to the consequent encroachment. Remember, what's the anatomy of a fair value gap? Obviously, it's a candle high and a candle low and a consequent encroachment between the two, but there's more to that, right? Quarter it down. Don't immediately look at the consequent encroachment. Look at the quarter of it, right? So if I'm taking that, if I'm taking the quarter of that, and then I go into a 1 hour, and I take the equilibrium of the consequent encroachment, or I'm at the equilibrium of this wick, right? You see how this stuff is all right next to each other? And then I go to the 15-minute. After I see how price delivers, right? What's right here? Opposing liquidity is taken. Sell side's taken. We deliver into that. I'm not worried about the consequent encroachment. I want to see what it does when it gets to the quarter of it first. We push higher. Okay, great. What can I utilize in this? Yes, there's a BISI in here. You could still potentially use that. But for the most part, you have the order block. And let's say you do take a couple losses here, right? Let's say you do buy into this. Let's say you do buy into this, somewhere in here, and you take a loss, or 2 losses. Well, if you're patient enough, and you let price play all the way through, and you go back down into like a 5-minute, or even go back on a 1-minute. If you're patient enough and you don't just take back-to-back-to-back losses within 5 minutes, price will give you an area to get back in, right at the same area that you were wanting. So let's say you do take a loss here, or a loss here, or you go break even. Let price give you more data, and then sure enough, odds are, if you're looking in the right areas of the market, it'll give you exactly what you wanted, right? Just because you might lose buying in here and get stopped out on this candle, that's okay. It's fine. You're just a little bit more impatient. Also, why are these lows a little bit more susceptible to get taken out? Time. We're not even at 9:30 equities open, and we had news, right? So all of these things are there. They're in front of your face. You just got to really look at them all. Do you use higher time frame targets or lower time frame for lower time frame entries? I took a similar trade but exited at the consolidation because my trade psychology didn't let me hold the trade. Yeah, I'm always using higher time frames. I'm always kind of nesting them together. But with regards to my targets, I'm executing obviously on an entry basis anywhere from 1 to 5 minute time frames, but my targets are higher time frames. They're probably on like a 15-minute range. But I have I build everything off of a solid narrative off of higher time frames. So yes, my targets are higher time frames, but my take profits are still lower time frames. My entries are the lowest time frames. I'll ping that out 1 to 2 time frames higher, look at the range, play the last premium or discount array of the range, not play external but only play internal, and then from there, I'm utilizing that whole narrative right there for the direction of it based on my higher time frame target. I never really, because of the way the term in which I trade, I never really aim. My higher time frame target usually, if I'm gonna hit that higher time frame target, it's because we're really close there. Like, I'm not playing the daily relative equal highs until we get really, really close to it. I'm playing that direction but I'm not playing towards it. I don't need the relative equal highs, right? I don't need, so for instance, let's say we have relative equal highs on the daily, right? And we're all the way down here. And we make a low, right? Let's just say, for instance, you'll see this a million times in the market if you stay long enough. I don't need this to be my target, especially if you're on a daily time frame or a 1 hour or a 4 hour. I don't need that. I need this. I only need this part of it, right? Yes. Can you get to that point and can you do that? And have I done it? 100%. But depending on the time frame, depending on the time of day, depending on whatever the case is, only do this. Because what's going to happen is you're going to find out that a lot of times price is going to do this over and over again. It's going to give you that over and over again. But what it's not going to do is give you this over and over again. Because what it could do is it could do this. Right? Look what you just had to go through to get this. Still hit, still there. Liquidity got taken. But guess what? I could get this, I could get this, and I can get this. Hopefully that makes sense. It's how can I be it's how can I put myself in the most consistent position to be profitable. This is being, you could still be profitable doing this stuff. This is what builds the trade, is the draw on liquidity. But how can I get into the market efficiently enough, consistently enough, and make sure that I get a piece? Henry, do you got anything? I know you had some. Did you trade this week, Henry? I think you had a couple trades.
I had a couple, but nothing recorded from this week. My computer was giving me some issues.
Yeah, I know. I am gonna try to get back on the recordings, guys. It's just a little bit harder to manage my MetaTrader entries with my my TradingView entries. Does anyone want to? I know we've got Chappie. I know you're in here. Nick was in here. I don't know if he's still in here. I think he might have had a dip. If anyone's got any questions, ask away. If y'all want me to go over anything, Henry to go over anything. If y'all want to go over some examples of inversion, we can. I know I was just flapping my beak for a while.
I think I had an old inversion trade.
Here, I got you.
I had to trying to find it.
Thank you, Chappie. Glad to see you back on the call, man. I saw your tweet the other day, so congrats.
Yeah, it's been a bit. Excited to get back in the saddle.
It's a fun saddle to be in.
Totally.
The only reason I'm muted, guys, is because I'm munching on these pretzels and I don't want you guys to just hear me chewing. I know that would probably drive me crazy if I was on the other side. But even after Henry goes over this inversion trade, if there's anything that y'all want to go over, that's something that happened in your trading week this week, good or bad, or if you guys got questions for either myself or Henry, just let me know.
Yeah, feel free to hop on and if you have any questions. It might take me a second to find this.
Macros? I'll find something for you. It's a lot. I'll find something easy for you to go back and look at. I think There's a list of them. Yeah, I got you. Let me see. So if you want to write this down, if you want to write this down, it's luck, or take a screenshot of it. You got your macros down here. Chat. Did I switch prop? No, actually, I've always used FTMO. I've been funded with FTMO for a while now. I actually used to, when I was doing those videos, I was basically trading off of TradingView for your guys' sake. I would do those recordings while I was trading. So I would have my iPad on a stand right next to me, and I'm ambidextrous, which is a fun fact about me. More so right-handed, but I would basically mimic and mirror what I'm doing on MetaTrader into TradingView, so you guys could see it. I just haven't had the time to really sit down and do that because I've been actually trading and coincide with my job. But I knew that if I just constantly posted MetaTrader screens, I wouldn't be able to get anywhere with a lot of people. With regards to, like, you wouldn't really understand how and why I'm going about my trade management and how I'm getting from the start to the finish of each trade. And so I just took it upon myself to, because I'm basing it, I'm not watching MetaTrader. It's just like the same thing with like TraderVate. I'm not watching MetaTrader. I'm just moving stops and entering and exiting. And I was able to kind of transcribe that while I was in my trades with TradingView. So I would just do it at the same time, and it allowed for you guys to kind of see actually what I'm doing on MetaTrader, and what I think is kind of the correct way to at least go about certain trades and certain stop placements. Hopefully it's luck that you, hopefully you got this. This is just a good little cheat sheet. And I literally I went on Twitter and just looked up ICT macros. He's big enough now where you can do that. Here's another one. But there you go. You can always go back to the recording and screenshot that. Penny on you.
Okay, I found it.
15 to 410. Yeah, so I mean, really what a macro is it's the last 10 minutes to the first 10 minutes of an hour, right? So it's that hourly close and open. You'll start to realize that for the most part. It's that hourly close and open, but it's not every single hourly close and open. It's certain hourly close and opens. But yeah, I mean, it's something to definitely study. I'm usually not. So that's like 150 to 210. Yeah, that's a good macro because you're coming right into the PM session.
Okay. All right, so this trade's a bit of an inversion idea here. So we have buy side. If you look on a 15-minute chart, I mean, sell side is taken right here, runs higher. Then as we get into the AM session, drop lower down to this last down close candle. It's like your OTE entry as well, right down here. And then trading back higher up toward buy side here. So that's right I have marked out up here. Then if you look at this structure right here, where we have a low, high, lower low, sell side was purge right here. and then we trade up into here. This has not been taken yet, but this is I'm anticipating this to be the breaker. Right? So we're consolidating inside of the breaker, which is where accumulation occurs. So here we have consolidation, then this manipulation moved down, right, just into a BISI right here, and then trades back higher. So we can have accumulation, manipulation, and then distribution up toward buy side. So we drop lower, price trade back up, closes above this SIBI right here, and then I can use this as an inversion model to enter long right here and target buy side. So right when it trades down into it, I'm getting long. Initially, my stop loss is under this BISI. If we're going to drop down in there one more time, and see I've marked out this volume imbalance as well. So after price closes back above this volume imbalance, then I can use that as an opportunity to pyramid. So close above, and then right there as it ticks back into it, I'm pyramiding. See how it holds just the low of the volume imbalance and then closes back above. Trading into these relative equal highs. Now I have some discount rates protecting me, right? This old high, this BISI right here, and these down close candles. To be fair, this stop loss shouldn't be quite at break even yet. I rushed it a bit early on this trade. You can see this order block continues to support price further and higher. Got these relative equal highs right here, or equal highs here. And I'm looking for that standard deviation and then for buy side. There on the 5 minute. There, that's the 5 minutes. You can see. Oh, right there. So we've got a 5 minute BISI right here as well. My stop is under the low of that. So I'm allowing that to trade. And there it is marked out there. Holding the consequent encroachment of it, trading into that order block, and then first targets reached, and then quickly comes up in price. So you don't have to necessarily, buy this. A lot of people are looking at this as that turtle soup idea, where you drop below sell side into some discount area and you can be a buyer. You can do that, but if you're not comfortable being a buyer immediately right here, what can you do instead? Or you can look at this as that accumulation, manipulation, distribution, and then just wait for the premium array to be disrespected and then be a buyer inside of there as an inversion model. So if you don't want to buy this right here, you can wait for that trade and the price to trade back above and to trade back down into here, just like we see here, closing above volume balance. One more time back into it, you're a buyer right there, and then you look for the highs and buys it.
I was just noting too that you could use this as a breaker if you wanted to also pair that up with
Yeah, absolutely.
balance. Solid trade, mate. Solid trade, mate. But
I think unless we've got some questions.
yeah, if there's anything that y'all want to go over, if anyone wants to share screen and go over anything, feel free.
Yeah, that was a pretty speedy line in the chapter.
It's always open. Anybody got anything? Questions, comments, concerns? Judas Swain. Henry, you want to do it or you want me to do it?
You can do it.
Okay, so Judas swing. So Judas swing derives from the idea of the opposite move of the intended direction, right? So every market starts in consolidation, right? You've got consolidation. In most cases, right here, what the market's doing when it's consolidating is it's building orders on both sides of the market, buy side liquidity and sell side liquidity. The market doesn't like when anyone wins. So what it's going to do is it's going to clear opposing liquidity prior to targeting the intended liquidity. So what a Judas swing is it's that opposite move prior to the intended move. So let's say that the intended liquidity is this buy side. Well, if that's the intended move, it's not going to just go higher like this and then go higher, right? It's not going to do that. It's going to, in most cases, it's going to take out the sell side liquidity first, right? It's gonna target the opposing liquidity. This right here is considered the Judas swing, right? It's that opposing move with the intended direction and the opposite to then take that, right? So if we're taking both sides of the liquidity, that first initial side of liquidity that we take before turning around is considered the Judas swing. So you've got this last piece right here is considered a Judas swing. So if we go look at the charts, I'll have you pick a time frame. Because people get caught up with certain time frames. You can pick a time frame and I'll go find one for you on the time frame. So just pick any time frame that you want or anything that you would want to view it on and I'll find a Judas for you. Or I can pick one to you.
15.
15 minute, okay. Friday after,
Friday after Asia.
that's market close. There is no Asia. He said 1 year chart in Q 2008. Alright, we can do that.
Thursday. Thursday's Asia
Thursday.
session.
Okay, Thursday's Asian session. 15 minute. Yeah, so right here. Right? This is going to be consolidation. Right? Markets booking orders on both sides of the market. Right? So you've got these relative equal lows all in here. And you've got relative equal highs in here. Right? And this Judas swing is going to be the move lower. So this entire move lower is considered a Judas swing because it is opposite of the intended direction or the higher time frame bias based on order flow. So we're not going in order flow. We're not in sync with order flow. We're going against it. We're taking out this, then we go higher, right? And then we're taking this out higher. Where this could be valuable is when we do get over here. So when we get to this point, you can start to use and manipulate this. You can start to use and manipulate this. How? Well, you could take the threshold of the down closure. You could take the threshold of the down closure. If I play it out, you also could use what could be inverted here. Well, there's a city right here, right? So you could just use that. And as price is getting into here, all you should do is just watch candle body closure. Price didn't close. Watch this low now. Watch to see if this low holds. Look at the candle body closure, right? So you could have, if you were trading at this time, be looking on lower time frames. Let's go into like a 5 minute. We'll go into like a 1 minute. Right? So if you're watching it on a 1 minute, price gives a market structure shift here. Price goes higher. Now you're watching to see if this low hits. And as price is delivering into here, again, you could potentially be a buyer with this as your stop loss. Right? If you also look, there's a BISI right here. Price comes and taps it. Takes out relative equal lows. And if I were to even take a quarter of this wick, you can see it doesn't quite even reach the quarter point of that wick. So you would be able to, and then what could you target? Well, there's relative equal highs right here, right? This could have been your trade. And let's say you weren't targeting external liquidity. What else could you target? You could target in here, right? There's relative equal highs right there. You don't always have to try to shoot for that. You could shoot for this. That could be your trade right there. How many handles is this? Say 5 handles. Perfectly fine. With a $400,000 account at 5 handles, I promise you can get it. You can get enough. Check the chat. Hopefully that helps. Kate said the time when the Judas happens also helps add to conviction. It happens during New York Open or London Open. Yeah. So really, what happens is prior to a session, price will build the orders. That session opens. It goes one way, and then you get the follow through. Vice versa. Session is about to open. It opens, goes an opposite way. It's enticing people to buy because they see support and then they see a reaction. So now they're buying. Where does their stop loss go? Right here. And then it goes lower. Hopefully that makes sense. Anything else? Anything else? For the most part, hopefully you guys know what to expect going into this week. Be safe this week. It is a very very hot week in the market with all those CPIs, PPIs, and FOMC going on. You got a lot of things moving, a lot of parts going on at once. So just keep in mind, remember it's surviving, not thriving. Make sure you can survive. Weeks like this are the weeks where most people can't. So if you can, that's enough. That doesn't mean you have to come out profitable. That doesn't mean you have to have the best week of your trading career. Just survive. Whether it's a little, whether it's break even, or even just minor losses. All that stuff is surviving. Could you add my emails to the email list? I used the link from my friend to get in for today. Yes, 100%. I'm glad people were able to share the link too. I will do that right now actually. I will even show you that I'm doing it. There you go. You're in there. Feel free to spread the word. I know I haven't been on Twitter as much, but I'll get back on there, and I'll still. This stuff is always open, right? I mean, it's still very much so a small group study. So if you guys got friends or whatever the case is, spread the word. Tell them to reach out to us. Other than that, that's about it for me. You got anything else?
That's it for me. That's it this week.
Alrighty. Well, I will leave y'all here to it. Thank you for hopping on the call. For those of you guys who are catching the recording, you guys as well. Enjoy the rest of your Sunday, whether it's morning, night, afternoon. I appreciate each and every one of you guys, and I will talk to you guys soon. Trade safe. Have a great one.
Take care, everyone. Thanks for being here.
Peace.